Hey, what's up, my friend? It is so good to be back, alright? So, welcome 2017, welcome to you, and welcome to this week's market analysis, right? So, you should probably know by now that, we had a 2 week break, right? Last couple of weeks, and this is the first video of 2017. So yeah, it's really, good to be back, good to be talking to you again. And in this week's video, since this is the first month of the year, this is the first video of the month, I'll be, looking through across the different financial markets, right? We'll have a look at the major forex currency pairs, we'll have a look at the global stock markets, and we'll have a look at the bond markets. So this is to equip you, right, with a broad perspective of what is happening right now in the financial markets. So all this and more in today's video. I'll see you there. Okay, so before I go through this week's market analysis, I want to share with you an event that I will be hosting, or rather conducting, right, on the 14, 15, 16, and 17 of January, right? So this is called the Trend Trading Bootcamp, and it's basically, right, catered to traders who have a full-time job, but at the same time, you want to learn how to trade profitably, right? So this is what the Trend Trading Bootcamp is all about, right? On how you can actually, be a profitable trader without quitting your full-time job. So if you are interested, right, you can see that on this page over here. Alright, so it's over 4 days. We cover different topics on different day. First day is about trading support resistance. Day 2 is about trading market structure. Day 3 is about price action, and day 4 is about combining all that you have learned in the earlier 3 days and how to develop it into a proven framework. Okay, so if you are interested, you can go down to the website. I'll put the link below, right? Just go down to my website, trading.com/trend-trading-bootcamp. Right, but don't worry if you can't remember this long URL. I'll just put the link below, and you can actually register for this event, right? It is free. So if you're on my email list, you're already probably aware of this, but this is, I think, more for those YouTube subscribers who are still not aware of this. Okay, so anyway, back to this week's market analysis, right? I'm going to cover basically a overview of what is happening across the global financial markets. All right, since this is the start of 2017, this is the start of a brand new month, January. Why not have a look at what the global markets are doing, across the broad spectrum of the different instruments. So the first one we're looking at is euro dollar. If you see euro dollar, right, you can see that it's pretty much at the low end of this range over here, at this area of support, right? If you ask me, right, the longer term trend is still towards the downside, but I do agree that we are currently at this area of support over here. And if you look at the daily, you can see that it's pretty much making lower highs and lower lows. So now the thing is, most traders would have this issue, where they think, hey, Rayner, the weekly is at that area of support, but the daily is in a downtrend. What should I do, right? Should I be long? Should I stay out, and stuff like that? And for me, it's very simple, right? You simply just trade what you see, not what you think, right? So a lot of times, right, many of you are going to look at this chart and think, oh man, this is at support, right? Price, is going up higher from here. This is a very strong area of support, right? I would say, instead of trying to predict what the markets will do, I would say a better approach is to focus on your time frame and trade what you see on your time frame. So what I mean by this is that since I like to enter my trades off the daily time frame, okay, I'm going to focus just on the daily time frame. So at the back of my mind, I know that on the daily time frame, the trend is down, right? Lower lows, lower highs. If you just plot out your 200 MA, is pointing lower. So you want to stay short. So number one, you got a trend with you, downtrend. Number two, the next question I ask myself, is it trading from an area of value? Like, for example, resistance area, or maybe, a pullback towards a respected moving average, right? If you ask me at this point in time, it's a no, right? Because the area of value that I'll be looking at is towards this 1085 level, right? If the market, or if euro dollar can retrace back towards this level, right, then yes, right, this is an area of value that I want to trade from to do business. And the third thing I look for is an entry trigger. Okay, so this is a very simple way to trade, pullbacks to support resistance. Okay, so this is euro dollar, right? No doubt we have the trend with us on the daily time frame, but I don't have the value and then I don't have the trigger. Okay, so at this point of time, I'm not looking to short just yet, even though I have a bearish bias. So pound dollar, right? Let's look at this, right? On the weekly time frame, again, it's in a downtrend. Okay, lower lows, lower highs, very obvious. Look at the daily, same thing. You have the trend bias with you, but the second thing you want to ask yourself now is it at an area of value? Right? If you ask me, it currently isn't, right? It's pretty much in the middle of nowhere over here, right? I'll be looking for this level over here. This is the 127. Right? If the market, if pound dollar can retrace back towards this area of value, then hey, this will be a level that I'll be interested to short. All right? Aussie dollar, weekly time frame, pretty much, longer term still in the downtrend, and then recently went to this range over here. All right? If you look at the daily, okay, the trend is still down. Is it at an area of value? We have support, support, support. Price broke below support, and then it retraced higher. Previous support becomes what? Resistance, right? Previous support becomes resistance. So we are currently at this area of value. Right? So we have the trend, we have the area of value that we're looking for, and the third thing we're looking for is the trigger. Do you have an entry trigger? So trigger is something that really differs from trader to trader. Some traders wouldn't mind, just going short on a lower close. Some traders would wait for a pin bar. Some traders would wait for an engulfing pattern. Some traders would go down to a lower time frame, like the 1 hour time frame, and wait for a break of structure, like for it to form a lower low, a lower high. For example, right now we have a lower low, and they wait for a lower high to form like this, and the market then trades lower. They go short on this break of this low. So right now, if this happens, if this potentially happens, you have a lower high and lower low. Okay, so these are all the different ways that you can use to enter the markets, right, using different entry trigger. But again, right, entry trigger isn't your focus. Your focus is number one, the trend. Number two is trading from an area of value, right? And the third thing, only then we look for the trigger. Okay, so Aussie dollar is one to be paying attention to, because we both have the trend, the value, and your trigger is really dependent on whether it gives you an entry trigger that you're comfortable executing the trade. Okay. New Zealand dollar, again, something similar to Aussie dollar, just that the pullback this time is shorter. This one, right? Then we have this bearish engulfing over here, right, at that area of value, right? And likelihood, right, if you ask me, price would continue trading lower. Dollar Canadian, okay, pretty much in an uptrend, right? If you look at the weekly, right, it's slowly trying to grind higher in this channel that I've drawn over here. If you look at the daily, it is much more clearer, and right now we're still at this area of value. And if you recall, right, the previous video I did, we talked about this setup over here. It popped higher, right, then it collapsed all the way back, right, towards this area of support. And if you are a trend follower, let's say you got long and then you were trailing your stop loss. Let's say, you were just trailing your stop loss, say, at this low over here, and the market trigger your stops and you got out of your trade for a very small profit, I would say that is a good trade, right? That is the hallmark of a trend follower. Just trailing your stop loss and let the market reward you. You don't try to, predict how high it would go. No doubt, right? If you exit near these highs over here, right, at this previous resistance, you will got out at a larger profit. But again, you're not a swing trader, you are a trend follower. So this means you're in this business to ride trends. If you were to exit at these highs, what if the market, right, does not, terminate at this high and continue trading higher, back towards here? You would miss this entire move. So the only way to actually be part of this move, should it happen, is to trail your stop loss, right? This is the hallmark of trend follower. I'm not saying that this is the best approach. All I'm saying is that if you want to be a trend follower, if you want to ride big trends in the market, you have to trail your stop loss. There is no way about it. Okay? But if you are a swing trader, then yep, exiting at this highs is a perfectly sound way to to exit your trades. So it really boils down to what you're trying to accomplish in trading. Okay, so this is the dollar Canadian right now, right? Still bullish at this area of support, right? If you look at this candle, it seems more like a doji to me. There's really no conviction, whereby the bulls are ready to push price higher. Because if you compare it to Aussie dollar, right, you have this very strong selling candle over here. New Zealand dollar, this bearish engulfing over here. Compare it to dollar Canadian, right? The strength isn't quite there yet. So you really want to be, I would say, watch this for further price action clues to tell you that the bulls are, ready, to take charge and push price higher. How do you do it? Well, if you can get a stronger higher close on the daily, that is one. Alternatively, if on the 1 hour time frame, you get something like this, right? The market pushes higher, taking out this highs, right? Then it does a pullback, right? And then it continues higher, right? You have somewhat of a continuation flag pattern. You can go long on the break of this highs, right? Perhaps stop loss, 1 ATR below this low. So I'll say this is a much more nicer price action confirmation instead of just seeing this doji looking like candle. Now, if you think about this on a 1 hour time frame, there is nothing bullish at this point in time. You're still having lower highs, lower highs, lower highs, and lower lows. Right, there's nothing bullish at all. So, if you are going long right now, you're basically, I don't know. If you ask me, I just don't feel comfortable going long at this point in time. Okay, so this is for the dollar Canadian. So right now you can see that we've just covered, the 6 major currency pairs. Let's move on into the global stock markets, shall we? So if you look at the weekly, this is the S&P, right? There is nothing bearish on this chart, right? So it's funny if you read news, you hear news, right? They talk about predictions about how high it could go. Honestly, that is none of your concern as a trader. All you're trying to do is to trade the markets, to trade what you see, and just to participate in the path of least resistance. So if you look at this S&P right now, where is the path of least resistance? Right, it is up, right? Weekly is showing you to be really bullish. If you look at the daily, right, there is nothing bearish about it. In fact, the daily, right, you can actually identify levels that you want to trade from, right? So this is a potential level that you may want to be trading, or rather going long into this pullback, or even up to this one over here. Okay, so this is what your support resistance levels are for, to identify levels that you want to be trading off, right? You want to plot them ahead of time and then wait for the market to come to your level. You don't want to be trading as the market is is moving. Like, for example, it's trading up here or up here, and you go long because you think it's so bullish, it's going up forever. Because if you do this, right, where are you going to put a logical stop loss? Well, if you look back, right, at this point in time, this level wouldn't exist, right? So let's not trade on hindsight, right? So if you were to go long over here chasing the markets, the next level of stop loss where it would be logical to put is somewhere below here, right? Maybe here, right? From a risk to reward standpoint, right, I would say this is a pretty large stop loss, which would result in a smaller position size if you were to keep your risk constant, right? I would say a better trade that would have been is to go long when the market actually did a retest over here. This was a much better level to trade off, because your stop loss can just go under here and it's much more tighter compared to going long somewhere here. Can you see the difference? Okay, so this is why you want to mark out your levels and wait for price to come to your level, right? Don't want to be chasing the markets all over the place. Nasdaq, right, similar story, looking bullish, right? A pullback towards this area of support, right, would be definitely a level to watch for. Right, among the 3, right, Dow is, I would say, the most bullish at this point in time, right? You can see, you just look at the daily, it's pretty much parabolic, right? Just goes boom over here, right? So when the market enters this type of structure in this type of trending markets, for those of you who actually were with me in the previous trend trading, I would say the workshop we had, right? Know that this is a parabolic move, and it's difficult to enter on parabolic move unless you trade off the lower time frame, or you trade individual candlestick patterns like the inside bar, or to trade the breakouts. That is about it, right? If you were to wait for a pullback, right? To me, the next, I would say, the stronger levels that I'll be confident about trading off is not until over here, right? So you can see this would require a very steep pullback, right? So the more likelihood for it to occur is to consolidate and then continue to break out higher, right? So it's important to understand the type of trend you're in, and then if you want to participate in this type of trend, you have to understand what are your options. Okay, so this is somewhat different compared to a trend that tends to pull back towards the moving average, or the 50, right? Because this is a much stronger move, a parabolic move, and it will be difficult to wait for a pullback. Okay, so let's look at the DAX, right? So this is the stock markets, right? In the Europe side of things, right? Still looking bullish, right? There's nothing bearish about it. The Euro stocks, right? If we look somewhere closer to Asia, right? In Asia, Japan, Nikkei 225 also bullish as well. If you look at the weekly, it's looking bullish. Right, the daily, if you want to go long, right? These are the levels that I would be interested in looking at. All right, Hang Seng is not looking as strong as the earlier indices, but still, right? You can see that it is, bounce off this area of support, right? Previous resistance turn support. We have this bounce over here, and again, right, just to illustrate my point, I'm not going to go long at this point in time, because you're not, I would say, you are far away from your level that you want to do business of. I know psychologically it can be comfortable, right, to go long after, you see, 4 or 5 bullish candles, but this is usually the worst time to be long. Think of it from just a risk to reward standpoint. You go long over here, where is a logical place to put your stop loss, right? Ask yourself. Well, if you've been following me, you know that below this area of support is where you want to put your stop loss. So say somewhere over here. Here to here is your stop loss, right? It's pretty darn wide if you ask me, right? Why wouldn't you want to, go long earlier when the market is hovering, say somewhere over here? And your stops can just go below somewhere here. You get a much tighter stop loss at this instance, okay? But well, at this point in time, your thought process will be, oh, look at Rayner, at this, huge bearish candles, right? The market is likely to go lower, right? And then you hesitate to pull the trigger, and then it pops higher, and then you want to go long. So by the time you go long at this point in time, what usually happens is the market rolls over, right? I'm not saying that it will, but there's a good chance, right? Because if you plot some simple trend lines, right, you pretty much can see that it's coming to this area of, resistance over here. So this is my point, right? Identify the trend, plot your support resistance level, price comes to your level, look to trade it, right? Wait for an entry trigger, and trade it, right? So looking at the bond markets, this is the 5-year treasury, right? Pretty much in a downtrend. So you can see that the 5-year, the 10-year, the 30-year, they're all trading lower. So what this means is that yields, or rather interest rates, is going up. So it shouldn't come as a surprise, right? Because we have, announcement of the rate increase. So you can see that the bonds, right, they are, trading lower. And this means that the yields are going up higher. And last but not least, I just want to share with you a setup that, I've been looking for a very long time, right? If you look at this is con. The weekly time frame is pretty much, right, like a dead patient, right? You can see that its pulse pretty much went dead over here, right? So this interests me, right? Because usually when the market goes into a tight, narrow band, it tends to explode higher. Which direction, I do not know. But my guess, my guess at this point in time, right, I could be wrong, is that it would look to trade higher, right? We have this somewhat of a inverse head and shoulders pattern. This is the neckline. So if this market con could trade higher, it does a pullback, right? I'll be looking to trade the break of this highs over here in anticipation of this higher prices of con. This could possibly be a bottom, right? I really like this trading setup, and that's why, I'm sharing this with you, right? So con is something to keep on your watch list, definitely. Okay, so with that said, right, I've come to the end of this week's market analysis, right? Just want to do a quick reminder that next week there will be no weekly market analysis because we have the trend trading bootcamp, right? So that will be on the 14th, 15th, 16th, and 17th. Is basically a Saturday, Sunday, Monday, Tuesday. So I figured, right, I won't be doing a market analysis next week because, I'll be busy with this event, and I would actually, do the market analysis on this event itself. So that will be on the 15th, the Sunday, right? So that would make sense. So with that, right, if you can make it, join me in the trend trading bootcamp. I'll just put a link below. And with that, I wish you good luck and good trading. I'll talk to you soon.